absolutely nobody has ever made generational wealth on a salary. It's interesting that 80% of value is created while a company is still private. And it's absolutely bizarre that the folks that are actually working towards creating these generational shaping companies don't have access to buy into companies.
What Infinyte is doing is almost democratizing the access that a tech operator can almost participate along with leading VCs in good quality startup equity investments.
We're seeing a cohort of users who work for tech companies and their wealth is tech-led. They're marked by their ownership in companies, which is through ESOPs.
We will attack private equity from all angles. Startup investing is inherently risky, and the only way to do it right is to have a portfolio approach. Moneyball solves for that. Since we got started, our users have invested close to $10 million via our platform.
We believe that the traditional wealth platforms that exist today are going to be inadequate for the needs of this burgeoning, emerging class of individuals.
Welcome to the Day One podcast by Elevation Capital, where we chronicle the stories and journeys of founders we partner with. Today, I'm thrilled to have Ankita and Joy, founders of Infinyte Club. Infinyte is a wealth creation and management platform tailored toward the intelligent investor. This investor is someone who has a point of view and wants access to compelling investment products. These are your employees, builders, operators of the tech and startup ecosystem. Infinyte is addressing the unique needs of this segment by providing access to thus far exclusive and extremely coveted investment asset classes with startup investing and private equity as their starting point. We partnered with Infinyte in 2022, and since then they have enabled more than thousands of investors build their private equity portfolio and closed over 60 transactions. Only last month, Infinyte emerged out of private beta. I would like to introduce Ankita and Joy, the founders of Infinyte. Ankita has over 15 years of operating experience in various consumer tech startups, including Zivame, Coupon Dunia, and Academy. She was also the co-founder of Delivery Chef, one of India's first food tech startups. Most recently, she led business and revenue at an Academy. We also have Joy, who has more than 16 years of experience in product across various industries, including gaming, urban governance, consumer tech, SaaS, and VC. She was instrumental in the launch of Surge and led programs, product, and community at Sequoia Capital India. So welcome, Ankita and Joy. It's a pleasure to have you on the Day One podcast.
Thank you for having us, Kshitij.
Thank you, Kshitij.
Let's start with the big picture. I'm curious, and I'm sure so is our audience. What is Infinyte, and what's the genesis behind Infinyte?
I think when we came together, I think we always knew we wanted to build in the wealth creation space. But I think before we jump into the genesis of the idea, let's talk about the name Infinyte. Joy, you want to jump in on that?
Yeah, I think the name Infinyte comes from the concept of the infinite game. It's this work by James P. Cars, sometime done in the 60s, which talks about just playing the game to stay in the game. And interestingly, the book's title talks about play and possibility. And I think that's exactly what we want to unlock with our product, right? The idea of play, the idea of possibility, and what wealth does to an individual.
And just to expand on that, right? I think when you have wealth, it opens up, it unlocks possibilities that were hitherto hidden away from you. So I think we were very, very clear that we wanted to build in the wealth space. And that's how we came up with Infinyte.
Nice. And also you're focusing on a new generation of wealth being created in India. So can you elaborate on that a bit more?
So I think to answer this question, I think we need to just unpack the origin story a little bit more. So I actually, started my career off as a money manager. I worked with Deutsche Bank for a few years, and then I moved to India to also work in the wealth management space. And I always, as a money manager, I found it almost bizarre that in the age of the internet, money management meant going to client after client and explaining products, selling products, which it just seemed, it seemed in the age of internet archaic, bizarre, and almost like it left a gaping hole. It made me feel like there was a gaping hole in what was available, and seemed inefficient, honestly. Didn't do anything about it at that point, but I think the tech startup ecosystem in India was starting to take shape. And I jumped into various consumer tech startups, and Joy had a similar experience, throughout her career as well. Joy, you want to talk about that?
Yeah, I think I came at Infinyte from the perspective of saying we've got all of these amazing products that are there for quick commerce and e-commerce and SaaS products for my workflows. But somehow my wealth management needs and my money needs were just not being addressed. So you obviously had like these DIY platforms on one end, and they didn't quite give me the data, the insights, the information to make intelligent decisions about my money. And then you had the other end of it, which was wealth managers who didn't really care for me because I wasn't quite in their cohort yet. And not everybody has an Ankita on a call or a WhatsApp message away, pick up the phone and say, hey, what's going on in this world? What should I be looking at? What are people like me doing, right? And I think that's where we came together and we said, look, this is interesting because we're both coming at this from a very different perspective. And how do we marry our needs and what we're missing out in this world of wealth management?
So this new generation of wealth that's been created in India, so how does this segment differ from traditional wealth holders in India?
I think we're witnessing a new form of wealth creation in this economy. We're seeing a cohort of users who work for tech companies and their wealth is tech-led. They're marked by their ownership in companies, which is through ESOPs. And what we're going to see in the coming years is that they're going to form a significant percentage of this $5 trillion economy that we're actually working towards, right? And this needs of these particular set of users is going to be very, very different. Let me ask you, Kshitij, quick one, right? Do you know anyone who's made money, who's gotten wealthy on just a salary?
On just a salary and no equity, you're saying?
Yeah, just a salary.
No, I don't think so. Hard to believe because most of the wealth is made through ownership and equity share.
Bang on. I think, Kshitij, you hit the nail on the head. Absolutely nobody has ever made generational wealth on a salary. And I think the cohort of users or the intelligent investor recognizes this. So they are opting to work at organizations where they are granted ownership and therefore have skin in the game. But at the same time, unfortunately, the same folks are left out of being able to participate in more such opportunities. So I think that is the core insight that we had to get started and to crack open this problem statement and start solving for the intelligent investor.
Makes sense. And do you think while this new generation of wealth creators is different, do their wealth management needs also differ from the traditional kind?
100%. I think the problem with traditional wealth managers is, unfortunately, traditional wealth managers took on this almost self-appointed life coach persona, of like, let me tell you what to do with your money. No, the intelligent investor or the folks that we are solving for are savvy. They are first principle thinkers. They actually know what's right for them. All we need to do is we need to arm them with the right information and the data to help them make the right decisions for themselves. And every individual is unique. Every individual's investing goals absolutely are unique.
Okay, so given your deep insights on identifying this user segment of the intelligent investor and also identifying their unique needs in terms of wealth management, what is your approach to address this market?
Yeah, so we started with the most exclusive, coveted, asset class there is, which is startup investing, primary, angel, secondaries, private equity, right? It's traditionally been only for a rarefied set of individuals. It's cliquey, you have to know, you have to have people in the know, and that's when you get access to it. And for us, the question was, how do we make this, one, both available and also accessible to more people?
No, No, it's interesting that 80% of value is created while a company is still private, and it's absolutely bizarre that the folks that are actually working towards creating these generational shaping companies don't have access to buy into companies. So, for example, if I work at company X, the only way I can get access is via ownership, via employment rather. So I can get, ESOPs in company X, but there are, the multiple other companies being built alongside where, I would like to have ownership, and that's been blocked away or locked away from this, investor who actually wants it, understands it. So that's the asset class we got started with. I think it's like Joy mentioned, it's exciting. It's historically not been available, and we've solved that. And it's interesting. Before we got started, we spoke to hundreds of investors, hundreds of individuals rather, employed at various startups, and just to do user research and refine our approach. And I think one conversation that really stuck out, and it was one individual who said, "I changed my job every 2 years, and I work for different companies." So we're like, whatever for, why? And his answer was, it really stuck with us. It said, the gentleman said that I'm portfolio managing my career. So
they're collecting these badges.
Collecting batches of ownership in different companies. So we found that fascinating. We were like, that was such an aha moment for us, because we were like, wow, that this is the only way someone can get access to the next generation company.
Yeah, I mean, you have to either be a very early angel investor and therefore get in, or the only other way to do this is employment, and that's it. And then or wait till the company IPOs, right? And that's very limiting for somebody who's actually so smart, savvy, has a point of view. Why must that be the only way to do it? And it's interesting, right, to like what Ankita said, that you end up being employed at one company, and because you're only employed at one company, you're not able to diversify your ownership. So how do you kind of make that happen? It was interesting, like even, as we were doing some of our user research, we encountered a group of engineers in the valleys of Bangalore, also known as HSR, right, who had actually thought about how they were a group of 6 individuals, and they had thought about how are they going to manage their ESOPs and their jobs. And so they maintained this Excel sheet, and they pooled and managed their ESOPs through that sheet. So the idea was, whoever makes money on it, they split the spoils of it, right? So they would buy, they would exercise, they would do all of these things, which was so interesting and so fascinating that there were individuals who were planning to do this and who were doing this.
Very interesting. So one aspect is about giving these individuals access to startup equity. And what do these individuals do once they do get this liquidity?
And exactly the question, right? Once all of these ESOPs get these pent-up ESOPs, as we call them, get liquidity, where do they get deployed? And that's the question. I think that's the future of Infinyte. We believe that the traditional wealth platforms that exist today are going to be inadequate for the needs of this burgeoning, emerging class of individuals. And and I think we're prepped to solve for that.
Yeah, I think it'll be generations before traditional banks, etc., even start to understand this asset class to be able to serve this customer. So I think it was an absolute no-brainer for us to get started with this asset to serve the intelligent investor.
Makes sense. So to summarize, your approach is almost like attract this set of intelligent investors in the tech and startup ecosystem with asset classes that they want, which they're eligible for, but they don't have access to, which is startup equity of other startups that they have a point of view on, but they cannot buy. And also be relevant in their overall investing and wealth journey by helping them track, create, and also manage all wealth asset classes. Fair enough. We touched upon this briefly earlier where you talked about your backgrounds, but both of you come from an extensive background in the startup and tech ecosystem. Has this in any way influenced your approach towards Infinyte?
Kshitij, I have friends in the US who would pick and choose companies to work for because they would IPO very quickly and that it could, create wealth for them. And I always felt a little left out of that story because, here they were amassing their IPO counts and also just diversifying their portfolio, right? They were investing in new asset classes. And I really felt that gap here in India. Because here it's not that it's a very different mindset. People have the smarts, the intellect, all of that. They just don't have the avenue and the access to do it. But that said, I think something that's very important for us to emphasize is this is not an asset class for everyone. It's not meant for everyone. It's extremely risky. It's extremely volatile. Companies go belly up all the time, right? So I think that's something very important to understand, that it's not for everyone. So it is, again, in its own way, meant for those who can get it and who can stomach the roller coaster ride.
Eligible for this.
For who are eligible for it.
So from all your research and work that you've done so far, why do you think now is the right time to build Infinyte?
Honestly, for us, it was like, if not now, then when? I think the data that is emerging was just so compelling. There are about 7 million folks in the country today that are working in tech, finance, and allied, industries. The data shows that there are currently about 8 lakh HNIs, and that number is likely to go to about 17 lakh in the next 5 years by 2027. Look at Freshworks. The IPO created about 500 crore patis. Flipkart has 20,000 employees, have got liquidity, with millions of dollars. And I think if you just look at the ecosystem today in India alone, the cumulative valuation of just the unicorns, and I'm just talking just the unicorns, is about $350 billion. So let's say that translates to about a $25 to $30 billion pool of ESOPs alone. So that's just in India, mind you. It's not across South, it's just in India. So I think this data was just so compelling for us, and I think it seemed like a no-brainer to get started from right here.
Fair enough. So fully agree, the opportunity is enormous, and the segment that you're targeting is sizable with similar pain points because they're all operators in the tech and startup ecosystem. Makes a lot of sense. So now let's dive into your products a little bit more. Tell me more about the products you've built to address these problems so far.
I think to get started, we said we will attack private equity from all angles. On one hand, a product called Owners enables you to track your startup equity in one place. The second product allows you to buy into startup equity via angel investing, allows you to get liquidity via secondary on your startup equity, and finally the product which we are super excited by, we call it Moneyball. Solves the two most pivotal problem statements that people face when they start to build their startup portfolio. You want to talk about that?
Yeah, I think there are two clear problems that emerge, right? One is that people don't really have a portfolio approach to how they invest. And then the second is obviously access. So with Moneyball, what we wanted to do was just democratize access in a way, but also at a ticket size that is manageable.
Absolutely. I think the biggest problem that people make when they get started with, building a startup portfolio is that, you'll say, okay, let me start. You'll put 3 lakhs, 4 lakhs, or, and invest in 3 companies over a period of, say, 12 months. By the end of the 12th month, your first company, which you invested in, has gone belly up, and it's, that money is lost. And then you're like, okay, let me slow down a little bit. Cut to, 1 year later, all 3 companies have shut down. And startup investing is inherently risky. And the only way to do it right is to have a portfolio approach. The only way you will make money out of investing in startups is when you have 12 to 15 companies as part of your portfolio. So Moneyball solves for that. It helps you have a portfolio approach to building startup investing, and also reduces the check sizes that are required to build this portfolio, to have this portfolio approach. And most importantly, quality deal flow. How do you make sure that you are accessing and investing in the companies that top tier investors are investing in?
How do you co-invest with them, right? Because typically these deals, as we call them in VC parlance, usually just get picked up by the top angels, and you'll never find out about them unless you read about them in the paper. So for us, it was, how do we give you access, and how do we enable you to have a view on this and begin your startup investing journey?
Makes sense. So if I were to put myself in the shoes of a tech operator today, so far access to such opportunities were rare and it was opportunistic. So I would get some access or the other because of some network I had, and I would invest chunky capital, as you said, and most likely they wouldn't have gone anywhere. But now what Infinyte is doing is almost democratizing the access so that a tech operator can almost participate along with leading VCs in good quality startup equity investments.
Absolutely.
And making the behavior also more consistent through Moneyball rather than opportunistic.
Absolutely.
Makes sense. Very interesting. While these products are fairly unique, right, and especially Moneyball very differentiated, what makes your approach defensible over time, right? Like what keeps your moat going for a while?
I think ours is a very layered product. I think this is a perspective that Ankita and I have held from day one, is that no category is one till it is both social and multiplayer, right? Think about actually how dinner table conversations evolve and conversations around the water cooler, right? It's all about money. It's about what are you investing in, what stocks are you buying, what are you doing. So I think it's interesting.
I was just in office now and my colleagues were like, "Aaj kitna up hai, aaj kitna down hai? Where is your portfolio going, up or down?"
Yeah, and I think that's just exactly how we operate as humans, right? And I think wealth is also interestingly silently social. And what I mean by that is that you have to know the right people, you have to be in the right room, you have to catch the right wind. So I think the question for us was, how do we build a product that suits and solves for this particular need of understanding from your peers of what's going on around you, and also understanding from those who are a little further ahead on this journey, and saying what have they done differently or what have they done interestingly, and how do we bring that to this cohort of users. So while we're building out this multi-layered multiplayer mode on our wealth management product, I think one thing that's very, very important is that having a smooth, stellar experience that builds trust with our investors is just table stakes, right? So whether it is operations, whether it is the legal paperwork, whether it's compliance, all of that, the nitty-gritties are covered. And what this means in practice is you can complete your KYC, your onboarding, and your investing journey actually in 3 steps in less than 48 hours. And that's what we make possible. This is just how we do things, right? And while that's why I say it's a multi-layered.
Cool. So providing access to these alternate asset classes makes you operate in a regulated environment. How do you see this? Tell us more about your approach towards compliance. Do you see this as an enabling factor or limiting factor?
I think right from the outset, we've had a very compliance-first approach towards building, Infinyte, and I think we're very clear, on our product that this product is not for everyone. You have to be an eligible investor to be able to participate in or invest via Infinyte. Because of our laser sharp focus on compliance, we managed to get our AIF license, really quickly, and we're really proud of that. So I think, just to answer your question, I do not think compliance or regulation should be looked at as a hurdle. It is just the cards you're dealt, and you have to it's the lines that you're given. You have to color within them. So I think we're very, very clear that whatever has to be done and offered has to be done in the right manner as the regulator intended.
Makes sense. Now just shifting gears a little bit, last month you emerged out of your private beta. Let's talk a little bit about product market fit. When did you first realize that you were onto something big? What were some of the early signs of reaching product market fit? Your thoughts will also help a lot of our audience who could be early stage founders understand where they are in their own PMF journey.
You feel it in your bones, Kshitij. You feel it and you know it. You have customers who love you, and then there are customers who are pissed at you sometimes. They're just banging down the door saying, "Hey, listen, did I miss this opportunity? Why did I not see this?" And I'll tell you what's really compelling about that.
That means they're feeling strongly about it.
You feel strongly, people give a shit. Yeah. You actually want somebody who cares. And that's exactly what is happening. Yeah. And the beauty of this is that the numbers are there to support you, right? And you can see it both in feeling and quantitatively.
Interesting.
No, I think absolutely. I think, we always heard of, founders say, that, you feel
Yeah.
PMF, and I think we never quite understood what that meant till we felt it. But it's true. You feel PMF in your bones. PMF is not a metric. It's a feeling. It's a all permeating feeling that not only us as founders, but the team feels it. You see this renewed vigor that suddenly everybody is, they're at their desk before they need to be. They will leave the office later than they need to be. They go the extra mile. And I think PMF should be redefined as a feeling, product market feeling.
Nice. Yeah, we should create a hashtag product market feeling now. I'm sure it'll be trending on Twitter X soon. But would love to go deeper into your metrics and also understand how your traction is evolving.
I think we are super excited. I think since we got started just about 9 months ago with transactions, our investors or our users have invested close to $10 million via our platform. This has happened across 60 odd primary and secondary deals, and we've enabled thousands of investors to make their first angel investment and start building their private equity portfolio. So that's been super exciting for us to help enable. I think in terms of what's coming next is we were very clear that private equity was a starting point for us. We wanted to get started with this asset class to serve this cohort of users, but I think as time moves along, we will start unlocking asset class after asset class with our unique take to serve our cohort of consumers.
Very interesting. And Joy, how do you see the impact of Infinyte in the broader startup ecosystem?
Good question. I think three things that I at least see happening, right? And this ties back to what Ankita said, I think, a little earlier, which is that wealth unlocks potential. It unlocks things that you didn't even know would be possible that you could do. Yeah. And I think what we're seeing is, one, India has currently about, I think, 26,000 eligible angel investors. And if you think about the US market, that's 10x that number. Right? So just look at the headroom that's available to grow and for this asset class to actually take off in this market. And that's one. The other interesting trend is the emergence of the solo capitalists. These are individual investors who've made their money through ESOPs and then therefore the IPOs or the liquidity that they have gained, and also have been trusted by other individuals to invest on their behalf. This is something we see in the US. These are former product managers at Google who've gone on to become very well-known angels, and they write sizable checks into companies.
They
right?
have good brand equity too.
For sure.
Exactly, and and founders want them on that cap table, and I think we're going to see that happening in India. Right, that was our thesis too, which was that how do we enable operators to come onto cap tables, because as founders we want active capital, we want smart capital. So how do we make that happen? I think that's another trend we're going to see. And I think the third is the most exciting, right? Which is that we're already seeing the emergence of these mafias, as most of us call it, which is founders emerging out of these companies and setting up more and more businesses. I think that's just phenomenal, and can't wait to see more of that happen.
Yeah, even for us, like a very strong pool of the next founders we invest in come from these mafias, as you call it, right? So we've also actively tracked those companies, the teams that they've built those companies, and try to find potential founders there.
No, it sets into motion this great virtuous cycle of employment, entrepreneurship, company building, and therefore wealth creation. So I think the zeitgeist of the times, and we're here
and
for
all
it.
of it is linked by this thread of startup equity. Right?
I want to add a very interesting data point to what Ankita said, and this is when we were talking to all of our early users and the research cohort that we were talking to. We asked them, what did you do with some of the liquidity you'd received? I think in that first 10 to 15 lakhs, it was a lot of vacation, it was paying off loans, it was like buying a house, etc. But once that liquidity amount hit about 50 lakhs to a crore, it unlocked entrepreneurship. Everybody just wanted to start their own business. It gives me goosebumps as I say this, right? Just imagine the potential that is there, and that's lying unlocked, just waiting to get out of the gates.
Yeah. You're at the cusp of an inflection point almost in this market.
It's pivotal.
Yeah, very interesting. Again, shifting gears a little bit, you guys have been in private beta for some time now, and you've still built a team with diverse skill sets in the fintech space. So how did you go about building your initial team?
So the product we're trying to build doesn't happen without a very special set of folks. So I think we've been very fortunate that our early team is multifaceted and brings equal part creativity and technical expertise to the table. So we have designers who understand finance. We have chartered accountants who are growth hackers. We have product managers who understand taxes. So we've been very deliberate in our choices of hiring our early team members or building the early team to make sure that they have this T-shaped persona where they're able to go across functions with ease, but also have deep technical experience and expertise in their core area. And this kind of product doesn't come together without a very special set of folks.
Yeah, it's an outcome of craft, I think, thoughtfulness and just being prepared, right? And what that means is when opportunity comes knocking, we know exactly what to deploy.
Interesting. Yeah, that's an interesting terminology. Like it's like founder mode, manager mode, 10x engineer, and T-shaped personas. And as you've scaled, how have you maintained company culture? How has strategies in hiring changed from founding team hiring to now as you're hiring for scale?
Yeah, I think we continue to be a very lean team, and we plan to keep it that way. Right? If you think about it, we're about 15 people in-house, just building and deploying. We have a set of principles that we operate with. I think one is every single person on the team is customer obsessed, which means the customer comes first, and then we always do what is right for the customer. The other thing is this deep focus on excellence, which means that we're always pushing boundaries. The other important thing for us is everyone is an individual contributor. There is no manager. There is no being managed, right? Everyone is really good at what they do. They're at the top of their game, and which means we enable an environment and a context in which you can actually bring your best self forward. That's how we also hire. And then I think the last thing, which it almost seems simple, but something we do every week is we host demo days where every person comes in and demos what they've shipped this week and what's coming up the next week. And we don't give up on our shipping cadence. We ship every week without fail. That's just non-negotiable. And it's interesting because I think this group of individuals in our team also believe in this, and that this is what keeps them excited as well. I think people want to work in an environment that is focused on excellence and just being the best version of themselves.
Yeah. I think the single most important thing, or that's worked for us, has been this demo day cadence that we follow, where you have to, come what may, put up a slide. If you've achieved nothing, put a blank slide.
Yeah.
So I think we're very clear about that if you've done nothing, achieved nothing, don't say it like it is. Or and I think this culture has set in motion this healthy competition, desire to make sure that they're coming across as their best self, because when you're in a team of A players, you want to keep that momentum for yourself as well. So I think that's really worked for us.
And it ties back to this concept of being an infinite player, right? Which means you have to stay in the game. You're not going to be, for the lack of a better word, benched, but you just want to be your best self, and you want to be in that game. You want to be on the strike line.
Makes sense. No, yeah, having met some of your team members, fully agree with the kind of multifaceted individuals you've identified who have T-shaped personalities as well as the culture you've built. So kudos to both of you for that. And now that we have covered the story of Infinyte, your metrics, and how you see the market going forward, and also a little bit about your team and culture, let's go dive into a little bit about your fundraising journey. So you guys raised a round from us as well as multiple angels. So how was that journey like, and what are some messages you would like to give an early stage founder who's about to go for their first venture pitch?
Kshitij, we raised our round when winter was just at our doorsteps. Thankfully, we raised from people who had seen us in the ecosystem. Our early believers were those who had worked with us and have been cheerleaders during this journey. Do you want to talk about how we picked the investors we want to work with?
Yeah, I think we were fortunate enough to have about 40 unicorn founders, back us, and most of them have, interacted with us or worked with us, or seen our journeys closely. So I think we're very fortunate to have them back us, and yeah, I think, and then we spoke to you folks, and we actually raised our round on an essay. We were steadfast about not creating a pitch deck, but we created an essay. I think just in terms of, I think to your question, advice, I think it's absolutely, crucial to pick your early believers who are, or your early investors are, people who identify with you and your vision very deeply. It's easy to be, a very supportive investor when things are going great and when everything is going right. It's very easy to be a supportive investor. But I think at this super early stage is when everything that can go wrong will go wrong. There are so many things that are unknown. There you're building out of thin air. You're making multiple pivots. Things are changing, and it's at that point that you need people who truly believe you and truly back your vision
and who understand you. And I think on that note, I would also add, do ref checks on your VCs, man.
I'm
right?
glad that ours came out positive then.
all elevation.
Yeah, I mean, because this is going to be a long-term journey. It's going to be a long journey where you have all kinds of ups and downs. You have roller coasters, and you want somebody who's going to be with you in the trenches, supportive, and also speaking truth, right? And sometimes you need a mirror, sometimes you need a cheerleader, sometimes you need somebody who's going to tell you that, hey, I think you need to take a relook at this. So I think, yeah, get your ref checks done on VCs. I mean, it's known that VCs will do ref checks on founders. So I think it should only be true that it's also the other way round. I think the other thing to ask, I would urge founders to do, is ask other founders who have worked with these VCs what their experience was like, right? Because it's easy to be supportive when the days are good. As Shane Parrish has this article where he says, look for what people do on their bad days. And I think that's what you also need to look for in a VC partner.
No, fully agree. I mean, these are things we tell early stage founders who come to us as well. Like be open, feel free to do refs on us, talk to other founders we've invested in, so build your own point of view, because it's a long journey. It's a decade-long journey, or even more at times. So you don't want someone as a founder on your cap table who you don't agree with, or you don't resonate with, or there's friction potentially, especially when there are bad days. So yeah, picking the right...
Call elevation.
Yes, please do.
Yeah.
And what were some of the interesting things you guys picked up in your fundraising journey, especially given your backgrounds as someone who started a company before and someone who was in the VC space before? Did your backgrounds help you, and were there anything interesting or different you learned in your journey?
I mean, I think we just have some really crazy anecdotes from those days. Okay, this journey of fundraising was so arduous, and it also interestingly informed how we built out our product for primary and angel investing. At one point, I remember I pinged a former analyst on the Sequoia team, and I said, "Did I miss that class where they talked about how arduous and hard this is?" And he's a founder too. He said, actually, no, but it's interesting, right? We don't quite see this side of it. Yeah. I think one thing we realized was how much work it takes to actually angel invest, right? It is like this paperwork, there's endless documentation, endless signatures. This is not something we'd seen, I think at least I had seen when I was on the other side of it. And one funny story is, at one point I remember I ended up going and liking one particular investor's tweets, like going way back.
This was an angel investor.
This was an angel investor. Only because, we had to get his attention, and I think he was busy, he was caught up. And at one point he's like, Joy, why are you liking my tweets? I was like, actually, I need your PAN card. So I thought it was hilarious, but it was also the truth of how angel investing, kind of happens today.
No, I think on a serious note, I think it is absolutely the way things were earlier, where you have to go, you have these folks who are obviously very busy and accomplished people, but the process of raising money from them is you have to go to them for documents and signatures, and I think it's poor experience on both parts, right? Like, you're wasting, a very busy person's time, with paperwork and stuff that should be digitally handled in today's day and age. And for a founder, it's also a waste of time because, you should be able to wrap this up very quickly and get back to building your core product. So I think for us, it was a very early, very quick lesson. And it was a no-brainer that we have to solve this problem. So it actually, it very gave us serendipitously gave us, exactly what was wrong with status quo, and said, okay, easy fix. Let's do this.
Interesting. So that's how the primary product of
Absolutely. That's how it actually took off. We knew exactly the pain.
So the pain points you went through your own fundraising journey, you created that into a product.
We don't talk about this very often, but I think at that point, Ankita was spending all of her time just chasing down investors. 40 of them, chasing them down, saying, hi guys, need your signatures.
This is for round closure.
Round closure, right? Yeah. And that's why Infinyte. I mean, it was so core and so important. We said, look, it has to be. I mean, you've got access to apps like Swiggy and Zomato where you're ordering food in like 3 steps. Why must this be so arduous? I don't mean to trivialize, but what I'm saying is when you're used to that level of experience, why can't we bring that to this product too?
Kshitij, we have to ask, what was Elevation's thesis? Why did you invest in Infinyte Club?
So at Elevation, within our fintech practice, we've been building thesis on investing in more consumer verticals, right? Which are like pockets of user segments which are growing, have homogeneous needs. And we believe that a segment first approach to solve the needs of this individual sort of segments of users is more powerful than having a product first approach, which is very horizontal. And similarly, we always had this to say that there is a new generation of tech employees, right, who have startup equity and are poised to create a lot of wealth over the next few years. And there is no particular startup addressing the needs of just this segment. So actually, when we met you guys, it really fit into our thesis very well to say that you were a platform that catered to this tech operator segment of users, which was sizable. And as we discussed, it was almost 7 million operators and employees in the tech ecosystem, right? Which is growing. And when we did more conversations, like it was very evident that just consolidating, visualizing and monetizing their startup equity was a severe pain point for these operators. Further, for the founders of these companies, visualization of startup equity was a powerful motivator for the employees, and that added as a pull in generally sort of talent crunched market. And we also realized there's a hunger among these operators to want to own more startup equity of other companies they have a point of view on, right? So when we met you guys, that was a very sort of interesting pitch. We really liked that you were starting with this acquisition product of giving access to private equity and startup investments, right? And staying relevant in the wealth journey of these tech employees and operators by helping them track, create and manage wealth, not just in startup equity, but also in other asset classes. So yeah, that's what we really liked. And as you know, like as soon as we met for the first time, it was like we had multiple interactions over 2 weeks and we closed the deal. So that was definitely a rush back then. So
call Elevation.
Yeah, I know.
Yeah, I think it was over 3 days actually that we met you guys, and then I think we closed the round in 2 weeks after that.
Yeah.
So looking ahead, what is your vision for Infinyte over the next decade?
I think our end game is pretty clear. I think we want to be the wealth manager for the next generation wealthy. So as we move along, we will start unlocking asset class after asset class for our cohort of investors and users, and own their entire wallet and manage their money in entirety.
Makes sense.
Yeah, I think we want to build a best-in-class product, this layered multiplayer mode, in a way that's not been seen before. I think it's time. It's about damn time.
Yeah, and as we wrap up, any messages you want to leave for our listeners in the startup ecosystem?
I think
have a ride or die. Like your co-founder is your ride or die. Like you need someone to just it's a long journey. It's arduous. It's crazy, but you need someone who you can just trust explicitly, implicitly, and who has your back. I think the other thing I would add is it's I think being a founder is being in athlete mode. You have to bring that kind of discipline and you have to bring that kind of rigor. You can't let your last game, hold you back from a new game that's going to show up at your door. It's interesting, right? Because I think founding a company is like creating art while playing a competitive sport. And how do you kind of bring both sides and to their fullest fruition? So yeah, you got to be in athlete mode all the time. Like be your best self, which means take care of your health, eat well, work out, compartmentalize, and just bring your best self.
Yeah, compartmentalization I think is something that's pivotal and crucial, especially to folks who are founders. I think you'll have days when you'll have a great win in the morning, and then in the afternoon you'll have a debilitating gut punch, and where your next meeting is going to decide a massive make or break moment for you. So you have to let each moment play out in isolation. You can't let it kind of overflow into the other other meeting, and you need to have a co-founder that supports you and centers you when you go through those ups and downs. So yeah, I think choose wisely.
Awesome. Thank you so much, Ankita and Joy, for sharing your insights so transparently with me and for our listeners. We are very privileged to partner with you guys at Elevation as you look to catalyze the wealth creation journey in the Indian startup ecosystem. And yeah, if you're a founder building in the fintech space, please feel free to reach out to us.
This was fun. Thank you for having us, KJ. And yeah, call Elevation, guys.